Yo, what's up, you guys? Welcome back to another video. And in today's video, I want to give you guys the usual market breakdown and tell you exactly what it is that you can expect in the market this week. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoy the video, please smash that thumbs up for the YouTube algorithm. Let's see if we can get this video up to 100 likes there as well, my good friends. Before we get started, I just want to inform you guys that my Instagram account has been compromised and suspended. I'm not sure why, but I'm waiting to see if they're going to lift the suspension. If they don't, I also don't care. But I'm just informing you, just in case you get messages from people pretending to be me, just ignore them until you see an update coming from our official account. If you don't see anything, then just know that the account has been denied. Okay, but the wealth creators will still be available on Instagram. Okay, so first things first, obviously, take a look at some fundamental data that we got last week, and clearly had some, had some mixed data coming through. Had some retail sales. We had the Empire State, the PPI, as well as the Philly Fed came through and said he's word on a couple of things or two. And basically, next week, not such a busy week for the dollar index. We expect some flash services PMI. We're expecting the FOMC to pull through and just give us an update on the economy and how things are currently going there as well. Now, that's basically what we're going to look out for this week. And the week thereafter, we're going to tackle everything that we got, the GDP and all of that stuff. However, it's one thing to notice is we've noticed that the dollar index was quite bearish. Uh, you know, from October going into December, and but again, we'll cover the technical analysis now. Article from CNBC quickly before we get to the analytical data that I got from just forex. Basically, the dollar bounces back with bets on Walkie's Fed. Basically, what that means is the dollar, as we saw, on Friday or so, I won't say bounced back because we're still basically trading sideways. However, we saw that the market had pulled back, had a massive liquidity run to the downside, broke below support, then broke above, and that's basically how the market works. Catching retail traders there at the bottom. But we could see that the dollar index had printed, it started printing these green candles, meaning that the bulls are stepping into the market. However, I do anticipate just a correction. However, there is now some thoughts, regardless of the fact that we saw the CPI data or inflation started to cool down. Basically, when inflation starts to cool down, what that means is the Fed is less likely to hike interest rates as aggressively as they always do at a 0.75. So the market is expecting the Fed to at least do it at a 0.50 or even lower if possible. And we could see that basically in the dollars. So there's now back to being, so that's what we had in the first place. Now there is now another anticipation that the Fed is now back to basically hiking their rates as aggressively as anticipated. This article rose here saying that the dollar rose on Thursday as the US Treasury yields increased as investors eyed hawkish comments from Federal Reserve, while the GBP fell as investors left unimpressed by UK's government latest budget. The greenback rebounded a little after falling in the recent 2 weeks, and that's basically what we saw over there. The market's been quite bearish for the lateral part of the past 2 weeks, which is unlikely to see for the dollar index. It says here, but an event on Thursday, St. Louis Fed President Bullard, as we saw now on Forex Factory, showed a graphic suggesting that even dovish assumption would require the central bank's policy to raise to rise to at least around 5%, while stricter assumptions suggest it would be above 7%. The federal fund rate is currently in the 3.75 to 4% range after a spate of aggressive hikes. So it says here, while he expects the dollar to go lower in the long term, Perry sees the opportunity for a bounce to 109.25 also in the dollar index, and then rolling over and continue lower. Now, when you talk about the 0.925, which is basically what he's saying is something they could have paid me to do as well, which is basically going to sit at this level over here. He's basically saying the market broke below support and we can expect the market to pull back to that level of the resistance and then continued lower. That doesn't take doesn't take, but in any case, so we expect a slight pullback in the dollar index, which is exactly what I said the last time. This is just some analytical data from just forex, but this is going to give us an overview of good different currency pairs that we have on watch list over here. We've got Euro USD and GBP USD. Then obviously going to add USD CAT as requested by one of the members there as well. Let me just remove this and add that to boom. There we go. So we can see it says that the Eurozone inflation rate decreased from 10.7 to 10.6. Core inflation, which exclude food and fuel prices, remain at 5% year over year. The data points to a possible peak in inflation. This increases the likelihood that the Bank of England will raise the interest rates by a 0.5% in the next meeting, rather by a 0.75%, as previously discussed. ECB spokesperson Lane said yesterday that the ECB expects inflation to fall next year, but also noted the importance of further interest rate hikes. So, highly anticipating euro to increase another 0.75, thus increasing the euro there as well. GBP on Thursday, the UK government unveiled a 55 billion budget plan aimed at closing the hole in public finances and restoring confidence in the British economy. These measures would increase financial hardships for millions of Britons who are facing the country's worst cost of living crisis in decades and its longest recession. Jeremy pointed that these measures are necessary to curb inflation, which has reached a 41-year high, and restore Britain's reputation. And this is why investors are not quite happy with that. Next up, we've got the Japan yen. It says here Japan's nationwide core consumer price index rose to a 40-year high from 3 to 3.6% with an expectation of 3.5%. But despite the fact that inflation rate has already exceeded the Bank of Japan's inflation target of 2% for the seventh time, the Bank of Japan governor was quick to renounce a statement that interest rate hike is undesirable at this moment. I just don't know why they would never want to do that. Next up, we've got USD CAD. It says your higher interest rate had driven the cost of credit in Canada, with mortgage rates up at 11.4% for the year, the largest increase since February 1991. This combined with higher rents helping raise housing rates. So the Bank of Canada raised its prime rate by 350 basis point from March to a 3.751 for the one of the fastest tightening cycles on record. Money markets are betting mainly on a 25 basis point in the next meeting. Also expecting the Feds to hike the interest rates there. Investors not too happy about the Bank of Japan, and we expect a pullback on the dollar index. Now, if you look on the monthly time frame, what we can firstly see is, like I said before, we have the market that broke below this very strong level of support, and once support gets broken, it becomes resistance. You take your Fibonacci from the high to the low after you get this massive impulse. We do have a 61.8 pullback, which then further gives us the confirmation that we can definitely expect the dollar index to increase in value. Now, the best way to approach this is quite obvious. We do have the market currently stuck in between support and resistance. Best way to approach this is to wait for clear break above that level of resistance. Once resistance gets broken, it would then become support. And then on the retest, we can definitely expect the dollar index to continue higher there as well. We do have the Nasdaq 100 as anticipated on the last breakdown. Now the Nasdaq 100 also, because we expect the dollar index to increase in value, and we obviously need to expect the stock market to decrease in value there as well. The Nasdaq has also been stuck within this within this range. I do expect some pullback in the stock market going into next week. And again, with the market is stuck between support and resistance, so the best way to approach is wait for a clear break below support. Once that support gets broken, it will then become resistance. Now on the retest, you can start looking for that continuation to the downside there as well. Next up, we do have gold. If you remember this breakdown I did on gold, I still anticipate the market to continue lower. And if you go on the weekly time frame, the next target is now set at this level as we expect a deeper pullback on the dollar index. Now, the best way that you can go about trading gold at the moment is obviously we have a very important structural level there that the market had broken below. And if you take your Fibonacci from the high to the low, I do expect gold to fall slightly lower further, and then we can see a pullback and then a continuation to the downside. And by then, the dollar index sort of hit that level of resistance that was one support there as well also. And so basically what I do next up in line is we have a GBP USD. Give me one second over here. Let me just add this to that. Next up, we've got GBP USD. Now, GBP USD is expected to continue lower this week. We had this massive liquidity run that the market had did over here, broke below support, tested it as resistance, broke above resistance, back to tested as support. I do expect a weaker GBP. And again, we have to wait for the market to break below this level of support. And once that support gets broken, it will then become a resistance there as well. And in doing so, will the market then also print um, with the market then also print this head and shoulders pattern, which is also considered a bearish pattern from a technical perspective. Next up, let me just do that. Next up, we've got Euro USD, similar price action over here. Euro USD is currently trading still slightly in, well, I won't say bullish, but, in bullish territory. The market had now broken. We can see here, this was a very important structure that the market had broken below. This level acted as support, broke below that, came back, tested as resistance, rallied to the downside, created back at resistance, fake out over there, get that retail traders as they normally do, broke below that. All of this, resistance is now once again support. I do expect a similar price action as we anticipate on the GBP USD, slightly lower on the retest, definitely move to the downside. We will also see the head and shoulders pattern being printed here, which is considered a bearish pattern from a technical perspective. Next up, we do have the Dow Jones. Now, the Dow Jones also traded slightly higher last week, also still stuck in a consolidation after the market had completed the gap over there as well. I was anticipating the market to continue higher just to complete that imbalance, as the SMC people would say. However, if you're on the weekly time frame, you'll notice that the market is trading at at a very strong level of resistance. I do expect a pullback, even if it's still here, and then from there potentially seeing the market continue higher. Now, I would say the best way to approach this is probably to look for those. Sorry, we have that structure there. See that green candle? It's obviously just to start looking for selling opportunities from that level there as well. And the best way to do it is drop onto lower time frames. Let's look for some good selling opportunities in the market there as well. And then we've got USD CAD as requested by one of the members. USD CAD just reached this strong level of support that is now turned resistance. And basically, I do expect it just to continue higher, and on the retest also start looking for that continuation. Alternatively, excuse me, we could expect a pullback first for the market to go and test that previous level of resistance that would be then acting as a level of support, and for the market to continue higher there as well. That is it from my side, my good friends, and just be careful with the with getting any messages from an account that looks like mine, because my account has been suspended. Thank you for your time, and as always, cheers for years.